Hey guys, hope you are all having another fantastic morning. Today, we are going to pick up right from where we left off yesterday. We touched on 3 of the biggest methods by which big powerful entities manipulate cryptocurrency markets. Those were pump and dumps, wash trading and order booking. Now, we are going to cover on the remaining 4 methods of market manipulation, and tomorrow we will move on to discussing the highly debated subject of what should regulation look like for cryptocurrency markets, if there should even be any regulation at all. There is a lot of arguments to be made with the stance that overregulation can worsen crypto markets. I saw 1 or 2 comments on the video saying that they dislike the way I am making this series because I am being too overly simplistic with my approach, and to that I must say that when I make these videos, I make them from the premise of assumption that nobody knows anything about what I am about to say, so that the video can be easily understood by newcomers. Way too many videos jump over the basics assuming their audience to know every concept, and that leaves people frustrated or disengaged. I want to make my videos as complex as possible while retaining the simplistic approach that lets newcomers and veterans both satisfied with a wealth of new information. I highly doubt most people knew about these types of exact manipulation tactics or any of the other stuff we have talked about. My videos, as far as I can tell based on feedback, are very profound and complex. My approach to them is just easy to access and understand for all folks, and that is the way it will stay. This channel is rated E for everyone, like my ex. So if you find that a bit distasteful or not good enough, I would urge you to look at other channels for similar content. In here, everyone is going to eat, and it's not like the subjects I talk about are easy or basic either. I talk about housing markets, crypto, GME and AMC, looping, inflation, general market news and sentiments, macroeconomics, healthcare market, psychology, SEC regulations, Chinese markets and economies, the impact of the pandemic and the role of the Justice Department. All to give you a broad understanding of the different roles the markets have and their impact on GME and AMC, so the criticism I saw saying my channel is basic had me scratching my head. It might be easy to understand, but I would not consider this channel easy. Anyways, moving on, we have some really cool stuff to go over, so let's not waste any more time. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. So, the 4th manipulation method by which Wall Street is manipulating crypto markets is frontrunning, which funny enough is one of their favored methods to use when they manipulate the stock markets as well. Frontrunning is essentially the practice of disseminating different information at different times in the market. This method allows for the manipulator to benefit from having early access to market information, such as an upcoming transaction or buy or sell trade order. Frontrunning tends to give those privileged enough to be able to do it a powerful position, such as brokers. Let me give you an example of what it's like in a more traditional market. Frontrunning would be a broker ordering asset for themselves before executing the client's order for the same stock. In crypto markets, front-running is possible by the transaction transparency of the blockchain as well as by the typical design of smart contracts. As miners maximize on profits, a bad actor can closely monitor unconfirmed transactions and potentially front-run unconfirmed transactions by sending an adaptive transaction with a higher amount of gas. Gas is a pseudo-currency representing the computational steps of a confirmation. Once again, researchers observed that in 2017, an increase in front-running activity was observed that led to the initial coin offering boom. New research shows evidence that abnormal mining behavior typically exists in mining pools, indicating potential front runs. Wall Street is indeed trying to manipulate and control every single part of the crypto market, from the selling portion of the markets to the mining portion as well. The 5th manipulation method found was insider trading, which is the usage of insider information that might predict future transactions for trades. As you might know by now, Wall Street runs on insider information. Though illegal, its existence can be observed in all financial markets in the world, so it comes to no surprise that it has found its way to cryptocurrency markets, where dishonest market participants benefit that blockchain technologies have, such as autonomy. As we have said many times, crypto markets as well as their many exchanges remain very unregulated to this day, something the SEC is trying to do something about. Insider trading in crypto exists mainly in the context of coin listings on exchanges which result in sudden price movements. Take for example the price spike that took place in Bitcoin Cash before it was listed in Coinbase. Exchange employees with access to this data can easily profit from insider knowledge of future coin listings or delisting, giving them ample opportunity to trade positions ahead of big catalysts where they could get very rich. The sixth manipulation method found came from distributed denial of service attacks, or DDoS attacks, which refers to an attempt to disable the service provided by a website or network. This is carried out by repeatedly sending high volume of service requests. DDoS attacks are carried out by several different sources, most typically done by a remotely controlled bot. Attacks by DDoS attacks to crypto exchanges lead them to serious performance losses, and at their worst, can result in temporary unavailability of access or services by the exchange. As you might imagine, this would be catastrophic for a business, as it would lead them to lose tons of customers and profits. It can seriously handicap a company. Feder investigated the impact of DDoS attacks on cryptocurrency exchanges back in 2017. They found that the number of large trades typically start falling sharply between exchanges one after another, almost like a domino effect. In 17 separately reviewed cases, DDoS attacks led to a significant decrease in volume, which is not good for anyone investing or having a business in crypto. We have seen many cryptocurrency exchanges fall victim to such attacks in the past, and these attacks are done by groups looking to collect profits on fallen prices. They manufacture sell-offs in the crypto markets to make profits on their bets on trades. And lastly, we arrive to the seventh manipulation method you need to know about, which are stable coins. Stable coins are cryptocurrencies whose price is controlled by either an active or automatic monetary policy. Their goal is to provide price stability in relation to a national currency or a basket of currencies or other assets. Tether is a stable coin that is tied to the value of the American dollar. Stable coins play an incredibly important role in cryptocurrency markets and exchanges because they allow dollar-like transactions and pricing of cryptocurrencies to be exchanged for dollar value amounts without forcing people to have to set up a bank account. Stable coin manipulation is my personal favorite type, because much of what I think has happened in the economy is tied to this particular type of scheme, so let me explain. There are many reports that claim Tether grants are related to inflation of the Bitcoin price. In other words, Tether has been a major reason for why Bitcoin has exploded in value these past couple of months. Research indicates Tether has been increasingly seen suspicious trading behavior. Tether has claimed they are backed by a reserve, but they have always declined providing proof, because it's most likely a lie to a big extent. Tether has also been found to be backed by a whole bunch of Chinese real estate bonds, and we know how China's real estate is doing. Tether is moving heaven and hell to avoid being forced to expose what truly backs their coin value. As such, it comes to no surprise that we are seeing researchers and scholars alike identifying manipulative trends originating from Tether. For example, evidence has shown that vast amounts of Tether were used to buy Bitcoin when Bitcoin value was falling, which was then suspiciously followed by new Tether grants. It is often believed in the crypto community that forces are using Tether to pump the values of Bitcoin at times, though the real reasons are still uncertain. However, we know Wall Street is parking tons of their money on crypto, because they want as much control over this emerging asset as possible. Stable coins are a way by which they control prices of crypto and maintain them elevated, because a crash in crypto will leave the stock market reeling back and possibly crash it as well depending on the severity of the crypto market crash. Remember that now we are seeing a ton of ETFs that follow crypto coins like Bitcoin surging. If crypto markets fall all of a sudden, the stock market is going to have a bloodbath like we haven't seen for a long while. It's why Tether is trying to hide what really backs them up, because admission of guilt could crush the markets and Wall Street just likes the pump stuff without care of the effect it has. It all ties back and forth, which is why it's so important to cover all aspects of the markets. And I think this is a good place to stop. Tomorrow we are going to start discussing overregulation and many other important concepts. I will be taking a break from the crypto subject after this week and then come back with tons of episodes sporadically over time, similar to how I do it with the housing market topics. We just have so much content to discuss and go over that I have to make room for new stuff. I want to thank you all for watching this little morning series. I am truly blessed to have such a loyal and interested audience and following. Let me know what you think, and if you missed any other morning episodes, I have linked part 1 and 2 down in a pinned comment. Again, thank you all for making it to the end of the video. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day, and I hope to see you later today on the recap video. Until then, keep on buying the dip and to the moon.